In 2015, RBI gave in-principle licenses to 11 entities to launch payment banks. Three players subsequently withdrew their application. Of the remaining, Aditya Birla Payments Bank Limited wound its business in 2019. Currently, there are 6 active payment banks: India Post Payments Bank, Airtel Payments Bank Limited, Paytm Payments Bank, NSTL Payments Bank, Jio, and Fino. Most of the payment banks has found itself in a tough operating environment. And today we will focus on one of the payment banks, Fino Payments Bank, which has been profitable for 20 consecutive quarters. The company was listed in November 2021 at Rs 570 per share and since has lost more than 50% of its value. It has been a roller coaster ride if you look at the share prices of the company for the past few years. Let's start the analysis with a quick look at the shareholding. Fino Paytech Limited is Fino Payments Bank's promoter with 75% shareholding. Who are the shareholders of Fino Paytech Limited? As per the company's 2024 annual report, the major shareholders are BPCL, ICICI Prudential Life, ICICI Bank, Blackstone, IFC Extra. The company also lists LIC, Corporation Bank, IFC, Indian Bank, Union Bank among its major shareholders in its website. The company has been able to grow its profits continuously over the last many quarters. The first quarter is usually a seasonally weaker quarter for the company. In the third quarter of financial year 2025, the company has been able to increase its profits before tax by 25% on a year-on-year basis. The reason behind considering profit before tax instead of profit after tax is that the company hasn't been paying any taxes until second quarter of financial year 2025 due to carry forward losses from previous years. The company has started paying taxes since second quarter of 2025. In the third quarter, Fino's revenue has increased by 25% from 370 crores to 461 crores on a year-on-year basis. I will divide the business basically into two sets of products. The legacy or hook products consisting of micro ATM business, Aadhaar enabled payment services and remittance products. These are the basic products which brings the clients to Fino's network for banking functions like cash withdrawal and remittances. The revenue from these services has come down significantly over the years. After some years of decline, surprisingly the revenue from Aadhaar payment services has started to grow last quarter. The domestic remittance income has decreased significantly in the last quarter due to changes in RBI regulation. The second set of products is the growth products consisting of CASA, cash management services and detail services. The subscription revenue from current account and savings account has increased by 51% in third quarter on a year-on-year basis, and the company's renewal income from CASA services has also remained very strong. Fino's digital services segment revenues increased significantly to 109 crores in the third quarter. As per the bank, this is a business-to-business segment where they have 23 partners live and have services like UPI, Pay-in, UPI Collect, etc. This will be a segment to closely watch out for. The revenue from cash management segment has increased by 11% year on year. As per the company, the number of clients in this segment has increased 231 with a diverse client base comprising of NBFCs, microfinance institutions, e-commerce firms and others. The core focus of our analysis today would be on what would change for Fino as it transitions from a payment bank to a small finance bank. If anyone wants to understand the existing segments in detail, there is a thread on Value Picker forum that explains most of the segment. Fino Payment Bank has applied for a small finance bank license and is awaiting approval from RBI now. As per RBI guidelines, a payment bank can apply for an SFB license after 5 years of operation provided it meets all the other eligibility criteria. Fino in its latest con call mentioned that the RBI is already engaging with the bank on the application and has constituted an external committee to review this application. As per the RBI guidelines, a payment bank is prohibited from lending and issuing credit cards. They can accept demand deposits from customers up to a limit of 2 lakhs. They cannot accept term deposits. However, they can do referral to other financial institutions for this business. Payment banks do have to pay interest to the customers who keep their funds in the savings accounts. So, what can they do with these funds? As per the guidelines, 4% of the liabilities, those are the deposits that they have, has to be kept as cash receive ratio with RBI like the other scheduled banks. 75% has to be invested in statutory liquidity ratio eligible securities, and a maximum of 25% can be invested in current or time deposits with other scheduled banks. We should be able to calculate the return on these investments that Fino is making in order to understand how that would change when they have an SFP license. So in order to understand the yield or the return on the investments, we have taken the total investments and the income on investments from the annual report, and we have divided them and we have received a yield of 6.6%. Now let's analyze what are the yield on advances that the other small finance banks are making. Equitas Small Finance Bank has an yield of 16.55% on the advances. ISA Small Finance Bank has a yield of 19.6% on advances. AU Small Finance Bank, on the other hand, has a yield of 14.4% on its advances. Fino generated an investment income of 37 crores in the third quarter. The company reported a profit before tax of 28 crores in the third quarter. So essentially doubling the investment yield could mean the company's profits could double with interest income. Suryodaya Small Finance Bank has an yield of 18.3%. From this you can understand that the small finance banks roughly has an yield between 14.4% and 19.6%, which is more than double the return that Fino is making from its investments. Fino generated an investment income of 37 crores in the third quarter. The company reported a profit before tax of 28 crores in the third quarter. So essentially doubling the investment yield could mean the company's profits could double with interest income. Fino's biggest advantage over other small finance banks is its low cost of funds, which is 2.2% as per company's quarterly 25 presentation. If you scroll back to the previous slides, you could see the cost of funds for Equitas is 7.49%, ISAF is 7.5%, AU Small Finance Bank is 7.06%, and Suryodaya is 7.7%. The bank's average customer deposits has also been steadily increasing and has reached 1,890 crores in the third quarter. No analysis is complete without analyzing the risk. As we don't want the risk analysis to be lost out on a large video, we will be posting it as a separate video.